What's up, Denver? Chris Lopez here. And this is no newsflash to you, but the market is shifting. In fact, I'd say the market has shifted some and will probably shift more. So I'm going to walk you through the framework that I use. It's a 4-step framework that I use anytime I have like major change in my life or the market shifts. I don't have a crystal ball. Can't tell you exactly the best investment in the world to make or what to do, but I can take you through the framework that I go through, and I found it very helpful. As I've talked to a bunch of clients and other people around town, walking them through these steps as well has been very helpful. So step number 1 is to take into account what the external factors are of the market, the macro conditions. So, and this is very much geared towards with real estate investing in mind, external factors, inflation, high interest rates, and war. Not a great headline there, but that's kind of what's going on. We all know it. But let me ask you this. What can you control out of those 3 things? Nothing, unfortunately. Can't control inflation, can't control the higher interest rates, and we really, unfortunately, can't control the war going on. But it's very important to look at those things and say, hey, here's what's going on. And realize that you don't have control of it, so stop worrying about it and say, okay, what's going on and how has this historically affected investments? How is this going to affect the economy? How is it going to affect my job or my situation? So I think going through those items and those external factors are a very important thing. When I do that, it helps me really put in perspective what is going on and also what I have and don't have control over. And I find that relieves a lot of stress for me and also brings clarity. Number 2, local conditions. This is the Denver Real Estate Investing Podcast. Most of the people listening to this are investing in Denver or up and down the Front Range. So look at the local market conditions, assuming you're here in Denver or Springs, wherever you're at, but what is going on in the local market conditions? While we can't control those bigger economic conditions, we have more insight into the local conditions. From a high level here, what's really important in investments, in real estate specifically? In my mind, it is supply and demand. What is the supply of houses coming on the market to buy and sell? And what's the supply of rental properties coming on the market? Since we're landlords, since we're investors, we really care about both of those. So supply and demand for houses, we know what that is. We still don't have enough supply and a lot of demand. Now, I'm really eager to see what the next month's numbers are like. I think supply will come up some, but this might be what we saw a couple years ago. We're still going to be very much in the seller's market with low supply. And we still very much have high demand. So the high demand being people are moving here, jobs are moving here. We're still seeing population growth. So demand is still going up. Supply might go up some, but we still have that imbalance. And so what happens? We have more demand than supply. Prices usually keep going up. Now on the rental side as well, what's going on in the rental market? Do we have the supply and demand? Well, from one perspective, with interest rates going up, it's going to bump out a couple people from the buyer pool. It's going to bump out people who just, unfortunately, they financially can no longer afford a home. So they were stuck to the rental pool for a while. It's also going to bump out other people like, you know what? I want to chill for a bit. I don't want to invest. I don't want to do anything. I'm going to sit here and just rent for another year. And so I think with higher interest rates, we're going to see more renters out there. So as a landlord, that's a good sign for us because that means we still have high demand and low vacancy for rentals. The other thing to keep in mind here is that in the Denver market, in the last 6 recessions, prices continued to rise in 5 of those. So only in 1 of those did we see prices go down. And that was in 2008 when it was a real estate driven recession. And the recession that economists are saying are coming up soon, it's not going to be a real estate driven recession. So number 2 is what's the local conditions and have a reality check on there. And we can talk a lot more data on there. There's a lot more trends packets I can share with you, but supply and demand is the most important thing. Number 3, what is your situation? I know what my situation is. What is your situation? And by situation, I mean your goals, your financial position, what your plans are, your job or your business, what's going on there. Now, while we all have same conditions for external factors, number 1, and number 2, local conditions, number 3, we have a lot more control over, and we're a lot more unique in that standpoint. So what is your situation? What are your goals? What's your cash on hand? What's your risk tolerance? What industry is your job or business in? Is this changing market a good thing, a bad thing, unknown? But really take stock about what your situation is. And this is the most important thing to focus on, is your situation, because that's what you have control over. Again, I can't control interest rates, but I can control my situation, my spending, opportunities that I create for myself from like an income standpoint. And I really think that is where the majority of the time should be spent, is understanding your situation and your risk tolerance. Because while numbers are very different today than they were 90 days ago, it's still a ton of investment opportunities out there, and doesn't mean you're not going to invest anymore. So what is your situation like? Has things changed? What's your risk tolerance? Do you need to keep more cash on hand? Do you want to keep less cash on hand? So take stock in that. And I think this is a great time to do some reflecting, some goal setting. We are halfway through the year already somehow. So this is a great time to reevaluate everything. I mean, go into every single bank account, stock account, property account, write down numbers. Are you within your minimum cash thresholds? Are you allocated properly? Like, get a really good understanding about your financial picture on there and help with your goals. Now, if you need help with that, reach out to me. I definitely love talking about this. We're going to be doing a lot more discussions around your situations and what opportunities lie in the marketplace for your situation. Like, we are doing upgrades to Property Llama for better modeling. We will be doing another portfolio analysis mastermind very soon this year, help people analyze their portfolio. So this is a big thing that I'll be focusing on, and I really enjoy helping people. Last but not least, what opportunities do you have out there? Because while all the market is changing, when it comes to a lot of the main investment vehicles out there, we all have similar opportunities out there. So I lumped them into the main categories: stocks, crypto, and real estate investing, and keeping cash on hand. Now, of course, there's a lot more stuff. I'm going to keep it very just broad and simplistic. Stocks are down about 20% or so for the year. They're volatile, and in times like this, we tend to see a lot more volatility, and the stock market has been very high the last couple of years. Crypto, which I am not an active crypto investor in, a lot of the crypto markets are down 50 or 80%. One of the reasons I've never invested crypto so far, because I like to see what happens in the bad times. Good times are one thing. I know the last, I should have bought Bitcoin 10 years ago, or even 5 years ago. We all know the run up that did, but we don't know the true nature of an asset class or like a friend or a person until the bad times come. That's where you learn the true characters of a person, also the true characteristics of an investment. Like, how does crypto perform during a recession? I don't know. It's going to be fun to watch, though. Real estate. Real estate's another asset class that we have access to. Now, one reason I'm very bullish on real estate still is because it's a great hedge against inflation. I'm sure you've probably seen the headlines and articles that when inflation goes up, more money and more people invest in real estate. Why? Because it's a great hedge against inflation. Now, go look at how real estate performs with inflation and compare that to stocks, compare it to crypto. I don't think you'll see any data on crypto, but you can find lots of historical stuff for bonds and stocks and other asset classes. So look at that. Now, when the market did go down, or has been going down the last couple of weeks, I have bought a little bit of stocks. I like to buy on the dips. I mean, I spend a little money on those, but it's still fun for me. But my main focus is real estate because it's a hedge against inflation. I have more control, but there's one more important aspect in here that the other asset classes don't give me: leverage. I can go out there and easily leverage with real estate. I can't go out there and easily leverage to get into crypto or stocks. And so one of the big reasons real estate is such a great wealth building asset and we get so great returns is because we can utilize leverage. So as you look at these different asset classes, take time, figure out how things have performed through the good years, the bad years, how they align with your risk tolerance, and how they're lining up with the market conditions we're seeing and also what your future plans are. Because here's one thing a lot of people aren't talking about right now. While we are seeing lower cash flow, we're seeing the stock market and crypto returns go down, is you also have to protect yourself against inflation. Inflation is a silent killer, and it eats your returns away. Because while I could keep a lot of cash in the bank, I'm not a fan of that because I'm going to be losing 8% right now to inflation this year or so. And that's just money that I'm losing in my bank account. So in my mind, there's a fine balance of still staying cash, heavy, 6 months reserves, my rules on there, but not too cash heavy because I don't want to lose out to inflation. So I've gone through all these opportunities here, and I can tell you what I'm doing. I bought some stocks just on the dip. I bought some, not buying crypto, not buying real estate at the second, but that's just because I've got a lot of other stuff going on. But I'm lining things up to buy more real estate later this year with getting my tax returns back. I'm getting a new HELOC put in my primary, and hopefully I can free up some more cash from other places, go out there, and guess what? Go out there and buy more real estate. Because what I don't want to do is leave a bunch of money and do nothing in the savings account. But that is what works well for me, and I can go very confident looking forward and saying, hey, here's what I know is going on. Here's my options. I know I don't want to do this, this, or this. I'm putting my focus on these two things. That's what I'm doing. So that's what I highly encourage everyone to do out there is figure out what's right or wrong to you, what's a good fit for you, but really take stock of your situation and the opportunities that you have. Because over the next couple of weeks, I should really say couple months, we're going to be producing more content talking about this, helping you figure out investment opportunities, where to place your capital. We're going to be doing more of these portfolio analysis masterminds. We're doing updates to Property Llama. I'm also going to do a lot more work on social media, a lot more postings on there, specifically LinkedIn and Instagram. So make sure you come plug into those. Why on social media? Because for current events, it's way easier to get fast information out there. Plus, when it comes to these type of topics, it's fun to have questions and answers. It's fun to have conversations. And podcasts are great, but they're a lot more of a one-way vehicle. Social media is a lot more of a two-way street, which I love talking and engaging with people. So make sure you start getting plugged into my social media accounts. The handles will be in the show notes because we'll be posting more content on there. And if anyone has any questions on investment opportunities, or they're struggling how to figure out this stuff, or you're just having anxiety about this, don't know what to do, please reach out. I pride myself in my ability to help solve problems and put frameworks together, and I really enjoy doing that. So if anyone needs that help out there, please reach out to me. I do want to help people figure out their options and go out there and do the best investing they can in the current market conditions.